Hello everyone, I'm Sahil and welcome back to the channel. My lazy has finally made it. It's 1 month and time for our monthly update. So yeah, like I mentioned, right, I'm getting busier with studies and I'm not that productive to juggle both the things. Hence, I'll just be focusing on making these videos instead, like, monthly update. I was actually quite reluctant to make this video as well. It took me a bit of convincing my lazy ass to just come in and be consistent with what I say. So anyhow, other than just like looking at my portfolio and how it's doing, right, I'm also going to cover like some of the news that are actually shaping the financial markets. So for this particular video, I have three. Firstly, we're going to talk about Evergrande, of course. That is the big shit going around. Then we have the US debt limit. If you guys have not heard about it, I don't see much people talking about it for I don't know what reason, and I don't even see the market pricing it in. So anyways, the third point is going to be the power crunch happening in China, Europe, and I'm not sure about US, but these two countries for sure. So yeah, let's get it rolling. All right, let's kick off with the big news, Evergrande, and I think everybody knows about what's happening, but I'll keep it brief and try to explain what really has happened in the past 1 year with Evergrande. So Evergrande, if you know, it's a very big company, a property development company in China. They're part of the global 500, Fortune 500 companies, so that's how big they are. And if you go to China, you'll see that every other building is actually titled as Evergrande. So yeah, they are definitely very huge. And what happened is in last year, 2020, August, China came up with this thing called three red line policy or something like that along the line. So what this policy did was it had like three different metrics that were used to encourage all these companies, right, to deleverage. Now corporate debt definitely is a big issue in China, and they wanted to reduce it definitely so that it doesn't blow out. And for that reason, this policy was introduced. And if the companies basically don't meet the three metrics, right, they won't be able to raise money from the banks. They cannot take loans on all those things, and it's going to be a big issue. So that's what happened with Evergrande. They couldn't meet the matrix definitely because that's how much debt they have. So they are only reliant on raising money through bonds. However, with recent stuff, right, they've definitely been struggling. And as the company gets more and more risky, the yield or the bonds yields also increases. So they really cannot raise more money through yield, and they started to default on their payments. And they have another, I don't know how many days, less than 30 days. If they don't pay their coupons on interests on the bonds they are due on, they will go bankrupt. And the thing revolving Evergrande is people are saying that is it the next Lehman Brothers moment for China? Is it or is Evergrande too big to fail? So they're trying to compare with Evergrande with whatever happened in US in 2008, and they think that Evergrande would go bankrupt and it will have ripple effect throughout the economy, which will induce recession. That's what happened in 2008 with US, right? With Lehman Brothers, it had a ripple effect all over the economy, and the entire economy crashed. So that is the thing. But in the US, the banks and everybody was bailed out by the government. However, the question people now are asking is CCB gonna do the same thing? Are they gonna bail out Evergrande? Is Evergrande too big to fail? So that is the real question, right? If Evergrande is too big to fail, that is when governments would go in and help them out, because if they fail, it's gonna, like I mentioned, have a ripple effect, and there will be a recession, which is gonna be a very bad thing. So some analysts, as you can see from here, right, some analysts suggest that Beijing may step in to rescue it. This particular person said that rather than risking disrupting supply chains and enraging homeowners, we think the government will probably find a way to ensure Evergrande's core business survives. So the core business is their property development. They also have other few businesses, but let's focus on the core business itself. So what would happen if they go bankrupt, right? That means they won't be able to pay off their suppliers, which they owe a lot of money to. They won't be able to complete the projects they are doing, and that means that people who have paid for a home won't be getting their home, and they will be a lot of mess with that, right? And that's going to affect further and further. It will affect the banks the most, because banks who have directly loaned or financed Evergrande won't be getting their money back. And at the same time, they have also financed all these homeowners that are actually buying home from Evergrande, and if they don't get, they are not going to pay the debt, right? They will be like, fuck, I don't even have a house, why should I pay for it? So it's going to have a lot of systematic problems in China if Evergrande fails. But there are other side to it as well. Like, a lot of people believe that, you know, the size of Evergrande is still very small, even though it's a very big company. It's small, so it's not gonna have that Lehman Brother type of movement, but it could ripple. I believe it will have ripple effects. I believe it's gonna be big, because if Evergrande fails, people are gonna be very scared to finance other property development companies, and if they are scared to do that, the yields on the other companies will rise. They will not be able to refinance to pay off their current bonds, and they could default as well. So it's just like going down and down and down, and the entire economy suffers, right? Banks are another problem. If they are not if they lose a lot of money, they won't be able to actually they will be a credit crunch, right? They will stop actually financing new projects that will further affect other sectors as well, not just like property sector, but other sectors as well. So that's how the ripple effects are gonna fan out. There will be job losses and all those things. So if Evergrande is too big, CCP would come and change that. But on the other side, right, I feel that it's a very difficult situation for CCP to decide as well. Like, you know, if they come and bail out Evergrande, right, it's gonna give a sense to the rest of the investors that, you know, just go and fund these messed up companies, because, you know, what is the two scenarios if they, so currently the bond yields are very high, right? Let's say about Evergrande, it's about 500% coupon rate that you're getting on Evergrande, and then I'm sorry, not coupon rate, but the yield you're getting on Evergrande, and is the same. Like, you know, the other property development companies have high bond yield as well because of the scenario right now. So each of the every investor will be like, hey, let's just go buy in. If the company doesn't fail, you get a lot of payments back, like you make a lot of money with your investment. But if the company does fail, then CCP is gonna come in and bail them out, so you don't lose anything, right? One scenario, you don't lose anything. The other scenario, you make a shit ton of money, and that is the perfect investment you can make. So these are the kind of effects that are gonna happen, and I don't think China wants to risk that as well. Like, all these investors who invested into Evergrande, right, they knew the risk they were taking, and they were getting paid for that risk, right? They were compensated for that risk. So if the company defaults, then they can't complain about it. So yeah, I think in a normal capitalistic market, right, the government shouldn't come and bail out failing companies. That is the thing. So I think China will try to stick to that. They don't want to get into what US have done. Once the QE starts, right, it's not possible to stop it. So I don't think China wants to get into that. Taking example of COVID also, right? China didn't have that many social benefits during COVID, right? As compared to US. US went all out, and they had to go all out. If not, like, the entire country would be dead. The economy will suffer really bad. That's how much, like, you know. Okay, yeah, let's just cut it there. All right, move on from here. So that's my whole point over here. I'm very sure that Evergrande will fail, and I'm very sure there are going to be ripple effects. But Chinese government, CCP, will not bail out Evergrande directly. They will let it fail, but they will try to stop the ripple effects. That's what I feel. And in terms of the stock market, right, I think that this will have a negative effect on the stock market, and I feel definitely the banking sector, insurance sector, all these financial institutes, right, are gonna face the rage. Their prices will go down. Ping An itself, I'm personally invested in. It's really very low right now. The yield itself is about 5%. Their dividend yield. So I never thought that would happen, but that has happened. So uh, it could go further down as well. We'll talk about it later. But for now, let's move on to the second news that we have, which is the US government will run out of money by 18th of October, Treasury Secretary says. So this is the news. I think it's not covered very well. I mean, I can see it in the news, but nobody's talking about it. And I don't think the risk is actually priced in the stock market as well. Obviously, there has been a recent downward trend on the US stock market. It has gone down about, I think, 4% from its peak, but that is I believe is related to the tapering of treasury buys. That's what Fed said, right? They will be tapering their purchases, or I don't know how you term it, I forgot, but they will stop, like they will reduce the amount of bonds they buy. So that will actually mean that there is less demand for bonds. The bond yield will rise. That will mean like it will attract investors to buy in treasury bonds. So yeah, the money will flow from stock market to the bond market. On the other side, it will also mean that as the risk-free rate, right? If we want to take the treasury yield as a risk-free rate, as the risk-free rate rises, the expected rate of return that you want from the stocks, right, is also going to rise. The expected rate of return is made by risk-free rate and the equity risk premium, the premium for taking the risk of investing into stock market that you want. So as the risk-free rate increases, goes up, even though the equity risk premium stays the same, you actually demand more yield. And if you want more returns, right, your stock price has to drop. So that is what I believe is the reason behind US stock market actually going down, S&P 500 going down, but it's not related to this news. However, this news is really scary, right? If you get the face value of it. So let me go through the entire news. Treasury Secretary Janet Yellen warned the lawmakers that the federal government will likely run out of cash by October 18 unless Congress raises the debt ceiling. So the debt ceiling is an imaginary line that the Congress draws, that this is the amount of debt the US government can take, but it's just that imaginary line. In the past, like since it was brought into limelight, right, they have actually raised the limit 78 times, if I have the correct number, and in the last decade they have raised it 3 times. So it's just a bullshit thing that, you know, they can raise any time. But the problem is both the Democrats and the Republicans have to agree on raising the debt limit. But what is happening right now is that I think the Republicans, so the Senate Republicans blocked the bill that would have suspended the debt limit. So Republicans, I think, are forcing Democrats to actually, they're using this fact as a negotiation point, a leverage against Democrats, that if they would have to first reduce the infrastructure spending that Biden has proposed. So they want the spending to be reduced, and that's the only way they will accept the suspending of the debt limit. So if the US doesn't raise the debt limit, they don't borrow more money, they cannot pay their bills, they cannot pay their employees, they cannot pay for their interest on the treasury bonds, and that means that US will default. It has never happened because basically, like, everybody knows that US bonds are like the safe haven, right? The US can never default because they can simply print more money to pay the debt. But with this case, they could actually default. However, personally, I think that will never happen. I mean, why would they take such a big consequence by just for like a negotiating factor? Like, if the Republicans block this thing, right, they block the debt limit to be raised, it's gonna cause recession in US, and it's gonna be very bad, because simply if the one thing that the US economy is running on is the US dollar being the reserve currency, and them being able to raise debt again and again at a cheap rate. But if this happens, that the biggest moat US has is gonna be destroyed, and US will be gone, like simply gone. So they are not gonna resort to that kind of consequences, right? Just because they want the infrastructure to be bill to be lowered. So they're just using it as a negotiating point, but when the time comes, they will raise it. Whether the infrastructure bill, spending is reduced or not, they are going to suspend it, and that is the very reason nobody is actually pricing this risk in the stock market as well. So that's my case over here. And Janet Yellen even proposed that they should completely eliminate the debt limit instead. Like, actually, I would agree with her on this. This is just it's complete bullshit, right? So what happened is, like, the Congress legislates the expenditures and puts in place tax policy that determines tax, and these are like the things that actually brings in the money and also determines how much the government is going to suspend. So if this is already established, right, why are you gonna, like, if you don't want to spend too much, then you should reduce this, right? Instead of, like, when it comes to the paying of these different policies and stuff, then you start to say, oh fuck, we shouldn't raise money. Like, if you've already approved the plans for what you want to spend on, and you know that you are not raising enough money with the tax policies, then you have to borrow the debt, right? And then why would you, like, fight when it comes to raise the debt? This is freaking dumb. But nevertheless, they have it, and I would agree with this lady over here that you should just get away with it. It's just bullshit, complete bullshit. But anyways, I think, okay, so the main point I would make over here is that this is completely crap. All right, what US is doing, I mean, they're using their powers to actually just print money. Imagine me having a printing machine at home, and then I can print as much as I want, and actually people would go out and accept that money. That would be just amazing, right? So this is the kind of scenario, I mean, the position that US is in. They can print money, they can give the money to their people. The people can actually buy goods from other countries using that money. It's just amazing, right? So, but this is not something that should work in a real world, but it's working, right? The question is how long are people gonna trust US with giving them a piece of paper and then taking their goods? I am very sure people are going to start rejecting that. Countries are going to start rejecting, and it's already happening in the outside world. No other country can do that, by the way. No other country can print money and not see inflation. US can do that because of how well they have established themselves in the 80s, 90s, 70s, those period. And there's various reasons to that. But nevertheless, I don't think this thing is going to last. There's going to be a change in the next coming decade. But if in the shorter term, obviously, S&P is going to see new highs and all those things. And the shit is going to go along. And actually, the countries, right, all the rest of the countries around the world do not want US to fail. If US fails, it's going to have a global effect. Actually, no other countries want US to fail as well. It is the largest consumer market, so a lot of companies or countries make a lot of money from US. They also invest a lot, so it's a freaking cycle that everybody wants to keep on running, but it is not something that is sustainable. It is a bubble in itself, so it has to burst at some point. But is it going to be a burst, or is it going to be a beautiful transition? That is a different story. So yeah, moving on, what is the third point? So power crunch. So talking about the power crunch, right, we have a problem in China right now. So there is not even electricity, let's say, to power the factories, and analysts around the world have actually downgraded their expectations for how much growth there is going to be, just because of this fact. There's no energy to actually power the factories to continue the manufacturing. This thing was highlighted because, at first China would actually ration their energy to factories so that they can power the urban areas during peak hours. But then in the recent, I think, past 1 month, there have been reports that there have been power cuts in the urban areas. The traffic lights have gone away. There's power disruption to telecom towers, and there's problems with phone connection. So it is highlighting that the problem is serious. There's really a power crunch, and then the question arises: why don't they start ramping up the power? Like, why not? The problem is with coal supplies. So there's not even enough coal to be supplied to the power generating plant, and they cannot ramp up the power. And why is there not enough coal? Well, that is because China is trying to push towards a carbon neutral uh, country by 2060. So they have been reducing the growth. I'm not saying that the coal production is not growing, but they have been slowing down the growth. So in the past, year to date, the coal production has grown 6%, whereas the energy needs have grown 14%, 14 over percent. So you can see the discrepancy over there. And the renewable power, right, is not enough to actually cover the gap at the moment. And that is the reason they are having this kind of problem. Also, there's another fact that they have a ruffle with Australia right now. They used to buy their coal, the high grade coal, from Australia back like 1 year ago, but they stopped doing it because of the diplomatic conflicts going around. They started buying it from Indonesia, but Indonesia itself is having a demand rise and like now as the economy opens up. So I think there's a slow, the purchasing, importing has also been affected. So all these factors have resulted in this thing, and definitely it's going to affect the economy for sure. But it's not just limited to China. Europe is facing its own problems. UK and Europe itself, they have the same problem. Everybody was rushing towards carbon neutrality and all those things, and the politicians, I feel, just wanted to talk about climate and all just to get votes, right, just to make the public happy. But it was never sustainable. Like, wind and solar are not at that level yet that it is sustainable to run economies with, and it's not cheap. So there's two very important things you need for energy: is it has to be cheap, and it has to be reliant, it has to be consistent. And renewable energy cannot do that right now. In Europe, I also heard that they have been shutting down nuclear power for the very reason. So yeah, there is a long way to go before renewables really become competitive with that. If you ignore the fact that there are pollutants from the conventional fossil fuels, right? Other than that, it has a long way to go for the renewable energy to be competitive. It's going to happen. It's going to take, I think, a lot of intercontinental collaboration. So there has been proposals where, if the sun is shining on one part of the globe at one time, right, it should be able to, the solar panels there should be able to transmit the power to the other side of the world, so that you can actually when there's night, you buy from the other side of the globe, and when vice versa, right? So that kind of collaboration is required for renewable to be actually a thing. Nevertheless, we are into this phase. In last year, when I bought I think a natural gas company, I was mentioning that renewable energy is not there yet, and we need a transitional fuel to go there. And I highlighted that natural gas is the transitional fuel. I got to know that because I was actually reading publications, articles, and all those things. Not articles, but I don't know. I was reading about various energy sources out there and all those things academically. So I knew this kind of shit happening. And I was saying that natural gas would be required. There will be increase in demand and all those things. And at the same time, recently I was talking, because I'm actually applying for jobs right now, and I went for a career talk with the ExxonMobil, and they also mentioned that they're actually transforming their plants from oil to gas. And it's a relatively easy transformation because the infrastructure can be reused for gas from oil. So I feel that it's easier to use the gas as an alternative while the renewable energy catches up, because natural gas is actually way less pollutant as compared to coal. So in past 1 month, that is exactly what has happened. Natural gas prices have skyrocketed. It has gone 2x, 3x, and At the same time, there has been more and more articles on the news coming up, and they are saying exactly the same thing, that natural gas is going to be the transitional fuel. So my investment thesis has played out. It has played out faster than I assumed, to be very honest with you guys. And I was a bit surprised when that investment actually 2x'd. So yeah, but talking about the companies later. And I think that is all about the power crunch. It's going to affect the economy, but well, things are going to get back on track. It's a temporary issue. Oh, but yeah, in China, winters are coming. So this is an issue that is going to increase further and further during the winters, because there is more energy demand during the winters, since China has a lot of cold areas and all those things. So yeah, that being said, let's move on to our portfolio now, looking at the performance first. So first thing about the performance, right? If you notice last month, when I was talking about my portfolio, I didn't do like these few months, early months of the year, but now I've actually increased. I mean, I went on to track everything from my videos I've done, and also my bank statements and all those things, and I made it very accurate, at least for year to date, right? My returns. And last month I mentioned that I was beating S&P 500, right? But actually I was not, after like getting all the numbers good. So I was below S&P 500 over here last month, and now I'm slightly higher than S&P 500 after the drop in S&P 500 in the past 1 month. So as you guys can see here, as of September, right, I'm up 24.26%. All right, as compared to HSI is down 4.7%. So I'm up actually, month over month I'm up 1%, and HSI is down 4.7%, which is huge. As HSI has been getting crushed, like in the past 3 months, it's just red. And year to date, right, it is a negative, what is that, negative 8%, which is tragic, right? And if I invested all my money in S&P 500, then in the last month it has also gone down by 2.5%. At the same time, in September, I got a huge payment in a dividend, one of the highest, as you can see, not one of the highest, but the highest, of $1,000 in a month. And this was actually given by one of the cash cows I have, like I've mentioned, KPBM Holdings. They paid me this amount. So yeah, that is awesome. Other than that, I think the biggest losses I've made in the past 1 month is in Ping An and Ping An Healthcare. So these are the ones that have been killing me basically. Ping An Insurance is down by a lot, 53. They went down to 49 HKD, which is crazy actually. 49, 48, yeah, which is really crazy price. The yield is now 5.17%, which is very good actually. If they're able to maintain this, right, the returns are going to be amazing for Ping An in the next 2 to 3 years. So I'm very bullish on Ping An still. Like I'm saving money. If the price drops back to about 48, 47, right, 48, I would say I will buy one more lot of Ping An. I have cashed out on AG Energy Holdings. So like I mentioned, right, they actually went 2x. So I sold some at $2, 2.50 HKD. So I took out all my costs from it, about 3.46 K SGD. I took it out, and now I'm just riding a free ride. Let's see how far it goes. If it 3x ride, then I will actually take all the money out. I feel like it can go higher than 3x, but in the short term, that is too much already. Like, I don't know, be that greedy. 3x, I'm taking out all the money. And I think it's very important that I hold some cash as well. There have been so many instances in the past that I have the opportunity, but I don't have the cash to actually buy it. So holding cash is very, very important. I've said this many times, but I'm not able to stick to it myself. So I'm trying to build at least 10% cash position right now. I have maybe, right now I have $7,000-8,000 in cash, which I can deploy in the stock market anytime. And that would be around, I think, 5% so I need another 5% to get to the 10%, which is still not enough cash position, right? So yeah, I have to build more and more of cash, and see if there's really very good opportunities, right? So now onwards, it's only if I see very good opportunities that I'm gonna buy. A small dip here and there, I'm not gonna buy. Baidu has gone down as well. It was trying very hard to stay above 155, but then it gave up and now is at 148. I'm down 11% on this. Ping An Healthcare has definitely been crushed. I'm down 44% on that. Very painful. I must say. I think I have to really dig into this company before I start to average down again. Let's see. I will take some time off and try to dig into Ping An Healthcare. I've not done that deep of analysis on Ping An Healthcare, so I think it's time I should do that and decide if I want to average down or not. JD was actually trying very hard to stay above 300, so 300, 290, very hard. And I feel that it was already, if you have seen my my, what do you call it, my financial model for JD, it is 302 is the fair price I gave JD to have, and it was already above that, and that would be the only Chinese tech company that would be at its fair value according to my calculations. So that is the reason I didn't buy much of JD in the past few months, even though the entire Chinese tech market is down. And I'm waiting. Like if it hits, it went down to 240 actually, but I didn't have the cash. Like I mentioned, right? So many opportunities, but I can't take advantage of it. So I'm waiting. If it drops way down there, 240 or below, then I will try to buy more of JD. But if not, I'm not gonna buy anymore. AAG I've already talked about. Then we have China Water Affairs. China Water Affairs is one of the companies that I think I've talked about it last month. So it has really seen really good gains. Now right now it's at $8.68. I'm up 44%, and the amount of investments I've put into it is quite a lot. So the gains are pretty good. I invested nearly 30K into China Water Affairs. That is how much commitment I had. How much conviction, not commitment. Conviction I had on China Water Affairs. I've made the video as well, and I think you guys know it is the biggest position I have in my portfolio, and they went up by 54% in the matter of 2-3 months actually. So that is great. Obviously I invested into this companies 2 years ago, so I have to split up this return over the course of 2-3 years, and that would be still a very good return, I would say. And I still hope that it will pop further. I have my fair value for China Water Affairs at about 12 HKD. So I'm not gonna sell this company unless it hits like 15 HKD, right? That is the overpriced territory. Then I will sell it. But until then, I won't. And I feel that looking at the charts, right, it has been struggling to go above and close above $8.87, and then it will be $9.14. That is the two barriers I'm looking at. Once it crosses that, right, the next point is like $10 over, and after that $10 over, it's a new territory, new all-time highs, and that is what I'm waiting for. And I think it has all the potential to go up. So yeah, but it has already established a pretty good value at about $8 and thing. It can stay at that range for a very long time to come, and it can also pop. Let's see what happens. But I'm pretty happy with whatever it does, right? I actually wanted to invest more at the $6 range. Didn't get a chance to, but it's fine. Then we have the funds, right, that I've invested in. They have been struggling as well. It's down about 8.52%. This is the big tech of not tech but bigger companies of China, and obviously they are down, especially Alibaba. They are heavy into Alibaba, and since Alibaba is dropping, they're dropping as well. And this is my exposure to Alibaba over here. Then we have this Asia small cap that is almost at my buy-in, but it's a very small holding, about $3,300. Very small. KRBN, the carbon credits I've been talking about quite a bit. They have given me good returns as well, so nothing to worry about. Okay, if there's a power crunch, the companies are gonna get like, you know, the energy companies will pollute more and more, because they're gonna go back to the conventional fuel, right? So there will be more pollution, and they have to offset it by these carbon credits. So demand of carbon credits should rise, unless the governments decide that, hey, we are in a deep shit right now, and we cannot afford for the energy prices to go higher and higher. Hence they will cut off the carbon credits. And that is the risk I see right now with carbon credits, since, like, you should all know that the energy prices are skyrocketing, right? So yeah, the government could actually stop the carbon trading, all those things, and give some relief to the economy. But let's see how this goes on, right? Yeah. That's about it, I feel. Yeah, that's about it, guys. All right, until the next one, ciao.